Hi guys, welcome back with me. Don't forget to like, comment, share, and subscribe this channel. Asia FX eyes weekly losses. Japanese yen supported by intervention by Amber Warwick. Investing.com, most Asian currencies fell further on Friday and were hit for steep weekly loss as hawkish signal from the U.S. Federal Reserve boosted the dollar while government intervention in currency markets supported the Japanese yen. The yen rose 0.2% to 142 to the dollar, recovering from a 24-year low on report that Japanese authorities had both yen on the open market to boost the weakened currency. The intervention helped the yen recover from the double whammy of a hawkish Fed as the budge maintained its ultra-loose monetary policy despite economic pressure from rising inflation and slowing growth. The currency was set to rise 0.6% this week after five straight weeks of loss. Still, the outlook for the yen remains dim, given that the budget is now the only central bank in the world to maintain negative interest rates, putting it at odds with rising lending rates across the globe. This has several pressured the yen this year and also caused considerable weakness in the Japanese economy. Border Border Asia currency were still reeling from a Fed rate hike earlier this week, where the central bank struck a more hawkish tone than expected. The dollar index and future were largely unchanged on Friday, but remained paying near 20-year high. They were set to reach 1.5% each this week. U.S. Treasury yield also rose, further pressuring Asian markets. China's yuan slipped 0.2%, hitting a fresh two-year low of 7 billion 7,957 against the dollar, while the Indian rupee hovered around record lows of 81. Both currencies were set to lose about 1.8% each this week. The yuan is also among the worst hit Asian currency this year as the People's Bank of China began trimming interest rates to support economic growth, going against the trend of rising global rates. On the other hand, on Philippine peso rose 0.2%, recovering slightly from a record low after the central bank hiked interest rates as expected. The country, like most others in Asia, is facing elevated inflation levels amid rising commodity prices. Losses in the Indonesia rupiah were also limited after the central bank hiked rates by more than expected on Thursday. The yen surged as the Bank of Japan intervened to support it in the foreign exchange market for the first time since 1998, only minutes after signaling it still doesn't want to tighten monetary policy. The Japanese currency bounced sharply from a 24-year low of 145 to the dollar, rocketing as far as 140 before starting to retrace its gain. The move is important because advanced economy central banks have largely given up on foreign exchange market intervention over the last 3 decades, allowing their currency to float freely in line with market fundamentals. The yen's fundamentals have been essentially negative this year, as the Bank of Japan has refused to raise interest rates, widening the premiums enjoyed by other currencies such as the dollar, sterling, and even the euro. Okay, maybe that's all from me. Thank you for watching. Don't forget to like, comment, share, and subscribe this channel.